Hello students, so today in our class we are going to discuss one of the most important topic of CMA Intermediate exam, that is composition scheme. Composition scheme means section number 10 of the GST Act 2017. These will be further subtopics which will be covered in today's class, that is the basic concepts, types of scheme, what is the turnover limit for the composition scheme, aggregate turnover, rates of taxes, and then ineligibility for the scheme, marginal supplier services, and last but not the least topic will be conditions and restrictions for compositionality. And I can guarantee, I can assure you that from these 8 subtopics, that is from complete section number 10 actually, you are going to get 100% 6 to 7 marks question in the examination. Okay, so let's start it. And yeah, one more thing, students, if you're facing any kind of difficulty, any kind of question, any kind of query in these particular topics, you can write those queries in the comment section. Okay, now let's start. So, the first topic which we are going to start today is the basic concept. What is the basic concept? What is the meaning of composition scheme? Okay, so actually, the composition scheme is a voluntary and optional scheme for the taxpayers. For which kind of taxpayer? Now let's understand it, friends. Okay. So come on the page number 46, section number 10. So it is a voluntary and optional scheme of levy of tax designed for small taxpayers. What happens actually? Let's take an example for understanding of this concept. Here is a shopkeeper who have just started his business and his turnover is ₹75 lakhs in the preceding financial year. Now you might be thinking, man, 75 lakhs turnover and you are saying him a small taxpayer. Yes, it's a small businessman, because this is not the profit of that businessman. This is the turnover, or I can say this is the sales of that particular businessman, which is actually quite low for the growth stage. Okay. GST department thinks, if this person indulges in the application of the GST, in the application of the monthly return on GST, that is the GST return, then collection of taxes from customers, paying it to us, that is to government, then setting of input tax credit, it will actually act like a hurdle for this taxpayer. It means that person will somewhat feel that he's getting a burden of GST. Okay. So for removing those complications, for those legal formality, GST department gives them the option that if any person is having a turnover of up to rupees 1.5 crore, what is the threshold limit? 1.5 crore in the preceding financial year. So as section number 10 is stating that person may be considered as small taxpayer. Okay, and we are giving an optional scheme to those persons that they can register themselves under the composition scheme. So first of all, I am repeating myself that this is an optional scheme for small taxpayers. It means it is not a compulsory scheme. If that businessman wants to opt that scheme, they can opt it. Otherwise, they can opt out and take the normal scheme. Okay. Now, what is this composition scheme? Students, in this particular scheme, the main thing is that if this is a shopkeeper who is registered under section 10, that is under the composition scheme, so that person has a benefit of not collecting taxes from customers. It is if Mr. J is a customer of this person, that is Mr. A. So first of all, if Mr. A is registered under the composition scheme, so he is not required to collect any tax from the customer. Ma'am, he is not required to collect any taxes, any kind of tax. It means if J is purchasing anything from Mr. A, so James is not required to pay any tax to the Mr. A. Okay, so first thing is clear that when the composition scheme, customer of that shopkeeper will feel it and not pay any kind of tax because they are not collecting taxes from the customer. Second, if they are not collecting taxes from the customers, so how these shopkeepers are paying taxes to the government, or they are not paying any kind of taxes? That is not real. They are paying taxes, but they are paying very, very minimal rate of tax. For example, if James purchased a particular luxurious item, for example, a car, from Mr. A, and if Mr. A is a normal taxpayer that is not registered under section 10, so in that case, on the purchases amount, 28% GST should be levied in the normal scenario. Okay. So what happens that Mr. A shall collect the 28% GST from Mr. G, and after setting of the input tax credit, he will pay the balance to the government. I hope you all know the meaning of ITC that we have covered in chapter number 2 also. Okay. But if some students don't know the meaning, or they are directly coming to this topic for my class, so I am explaining the meaning of ITC also. Okay. So first of all, let's take a brief about the ITC also. Students, ITC means input tax credit. Input tax credit. So this term actually derives from the word input. It meaning, if I am going to a shopkeeper and I am purchasing a mobile, I am purchasing a mobile, suppose of 20,000. So this mobile, that mobile will be an input for me. That is, it will be an inverse supply for me. It's a purchase for me. Okay. So when I purchase this mobile of 20,000 from a shopkeeper, suppose, let's assume that shopkeeper charged 28% GST. Okay. So this 28% GST which I have paid on that 20,000 rupees to that shopkeeper, it is an input tax for me. Why input tax? Because on inverse supply, on taking the input, I have paid that tax to that shopkeeper. So for that shopkeeper, it is a GST charge from the customer, but for a customer, it is an input tax. Okay? Understand? Now, students, so this input tax. I hope you all understand the meaning of the input tax. And if you're liking this classes, so please subscribe my channel also. Okay. Now, the next thing. Now, let's assume that I have a business of selling mobile further. Okay. So now I'm converting this example a little bit. This shopkeeper is actually a manufacturer there. And I am a wholesaler of mobile phone. Now, I have purchased the mobile of 20,000 as a manufacturer, and I have paid the 28% GST to that person. So, that 28% is input tax for me. Now, I have sell this mobile because if I am the wholesaler, so for short, I am going to sell this mobile to any other person also. Now, I am selling it for a profit of 2,000. That is, I am selling it for the amount 22,000 to Mr. G. Okay. Now, when I am selling this mobile to Mr. G, for sure, I am also going to charge 28% GST. Okay, because GST rate shall be same for all the persons who are going to purchase or sell the mobile. I am taking the 28% just as a random rate. Okay, not as exact, just a random rate. Now let's assume, students, that if suppose, now students, on 22,000 multiplied by 28%, that is 6160. Okay. It is, I have collected rupees 6160 as GST from the customer. Okay. And I have paid to the manufacturer 20,000 multiplied by 28%, that is 5,600 rupees to the Mr. G. So now, what is the actual scenario here? That I have an output tax. Output tax means tax on the output supply which I am supposed to pay with the government. So I have a output tax liability of 6160 less the input tax which I have already paid to the manufacturer. I am getting an opportunity in the GST that I will set off. That is, I adjust this amount of input tax and I will pay the balance amount to the government. As I have already paid the 5,600 for this mobile to any other person. Now, so I am not going to pay it again. Okay. So now, less the input tax of 5,600 and the balance will be paid to the government. That is a net tax liability for me. Now, when I am adjusting this input tax from the output tax, it is an input tax credit. Okay. So this ITC, which is available for me, that is the credit which is available for me, which I can adjust from the output tax liability, is known as input tax credit. I hope you got my point. Okay. Now, students, again coming section number 10. Now, what is happening here? That 28% GST. Now, the Mr. A, again I am repeating that if the Mr. A is a normal taxpayer, so he is collecting the 28% GST from the customers, less he is going to adjust the input tax credit which he has already paid by purchasing something from the other shopkeeper, so less ITC, and the balance will be paid to the government. But in the case of composition state, this Mr. A, that is a shopkeeper, is not allowed to collect GST from the customer, it means he is not going to collect 28% from the customer. Now, then how is going to pay the amount to the government? Actually, instead of 28%, Mr. A is going to pay only and only, let's take an example of half percent CGST plus half percent HGST. That is our first rate supply. Okay. Half percent CGST and half percent HGST. So effective rate shall be the 1%. Instead of 28%, he is going to pay to the government only 1%. So math, does it mean that the person is going to collect that 1% from the customer? He is not collecting. He is paying this amount from his own pocket, that is in the turnover. So whatever the turnover of that person, he is going to pay half percent CGST and half percent GST to the government. I hope you got it. Yeah. But there is one disadvantage for this person also, that because the rate is too high for the normal taxpayer, they're allowed to take ITP. But this Mr. A is not allowed to take input tax credit. It means if he had paid already any amount of GST to the shopkeeper from which he has purchased any product, he cannot take the input tax credit of that GST part, that is that of IT. Okay, so what is he going to do? He is not going to collect the tax from the customer. Secondly, he cannot take the ITC credit. Okay, he cannot take the credit of the input tax also. Comparable. So it is a voluntary and optional scheme of levy of tax designed for the small taxpayers. Why they are known as small taxpayers, students? Because small taxpayers are those persons who have a turnover of up to a prescribed year. Okay. What is the objective of this composition scheme? The main motive, the main objective of this composition scheme is to bring simplicity and to reduce the compliance costs for the small taxpayer. Okay, now they understand is to bring simplicity. But how it is reducing the compliance cost? Because today, a normal taxpayer is required to file the GST return on a monthly or on the quarterly basis in some cases. But the person who are registered under composition scheme is required to file only a GST return on the annual basis. It means once a year. So for sure, if Mr. is coming to me that ma'am, please file my GST returns on a monthly basis. So obviously he has to pay my fees on a monthly basis, but now he's coming to me only on annual basis. Okay, so the compliance cost for the small taxpayers are reduced. Secondly, they are not required to maintain any info account, so that cost will also be reduced. Otherwise, an accountant is going to charge a huge amount from that cost. Initially, actually, what happens is, now students, initially when this scheme was done, the scheme was designed actually for the two categories of person. First of all the categories of goods suppliers was covered here. That is goods trader, goods retailer, goods wholesaler, goods manufacturer, all categories. But for the service providers, only one category was covered at the initial stage. That is the restaurant service provider. That is, the restaurant service provider might be as a student or as a faculty or any other person or as a government, we always actually saving for the restaurant food. Now, IT GST department will also pay for that more. So they designed the scheme for the goods traders and on the category of service providers, only the restaurant service providers. Okay. Now the jokes apart, but students, when the person see actually even when we as a service provider see that only the restaurant service providers are covered here, we are very angry from the government. That why they are doing this? That just one thing, that either remove all the service providers from the scheme of composition scheme or take all the service providers in the scheme. Okay. That will be fair enough for all the service providers, and not just for one. You can give the benefit of the scheme. Government what does? This scheme was initially designed as section number 10 of CGST Act 2017, but when all the service providers got angry, they issue a notification. Okay, they issue a notification in which they state that all the service providers will be covered in this. That's great. This all happened in the year 2017 when the GST had been done. But now it is year 2024. So what happens? This notification also turns into section number 10, subsection number 10. Okay. So now all the service providers category of service providers have covered under section number 10, subsection number T. And we got topics. So initially the scheme was designed to benefit the small traders, manufacturers and restaurant service providers. However, subsequently all were introduced in this. Now, it is easy compliant as we are not required to maintain any accounts and record. Simple annual return and payment to the government is also done on the quarterly basis. That is after 3 months. Okay. But in the case of normal scheme, we have to pay the GST to the government, that is the net GST to the government, and every monthly basis. Now, section number 10 stipulates 2 types of compositions. How much type of compositions is under the section number 10? 2 types. So, students, as we can see that the first subpoint, that is a basic concept we have covered this point. The first subpoint, I hope you all got this point. If you have any query, you can definitely write in the comment section. Okay, now let's start. Second is types of composition scheme. So basically types are categorized into 2 subsections. First is section number 10 subsection 1 and section number 10 subsection 2, in which there is a scheme of composition scheme for good and also for the restaurant service provider. Okay, and then the new subsection have been introduced. Section number 10, subsection number 28, in which all the categories of service providers have been covered. Why? But except the restaurant service providers, because they have already covered in the section number 10, subsection number 1 and subsection number. So, with this part, we have covered the second subtopic also, that is how many types of composition scheme is there. Third is what is the turnover limit for this composition scheme, that who are the persons who can take the composition scheme benefit. So, first of all, we are going to cover the category of goods, then we will cover the category of services. In the case of, so there are basically 2 parts here, turnover limit in case of goods and turnover limit in case of services. With the goods, restaurant service providers will also be covered in this category. That is the turnover limit for the restaurant service providers, the same as the goods provider. Okay, now start. In this case, initially what happens is, this was up to rupees 50 lakhs. No need to write it because this have already been amended. So, just write the amended part. Initially that was up to rupees 50 lakhs, but government makes a provision that it can increase. It means initial that was, at the initial stage it was written that a person who is getting a turnover of up to rupees 50 lakhs in the preceding financial year. Yeah, we have to always check the turnover of the preceding financial year on the basis of which we opt for the scheme in the current financial year or not. Okay. So, initially that was about this up to 50 lakhs, but government makes a provision already that it can increase up to 1.5 crore. So, as per the current amended provision which we are going to write in the examination, it is that a person who is getting a turnover of up to rupees 1.5 crore, up to rupees 1.5 crore, 1.5 crore, and preceding financial year, so that person can opt for the composition scheme. But here is the twist. The twist is student. There are 2 types of states in our India. 2 categories of states or union territories in our India. Yeah. So as per the supreme law, I'm not saying the Supreme Court, I'm saying the supreme law, which is the supreme law for India, Indian Constitution, Jai Hind, Jai Bharat, Indian Constitution, in Hindi we say that Bharat ka Samvidhan. Okay. So students, in Indian Constitution, states are categorized into 2 parts. That is, first is normal category states and second is special category states. Special category states. How many kinds of special category states are in India as per the Indian Constitution? There are 11 special category states. Okay. Now, GST law has taken, from this 11, they have taken the 8 special category states. Okay. That is, I can write a memory technique for it. USAMPA. I will explain this memory technique also, but just please try to understand the concept. They said that for these special category states, USAMPA basically, it is for Uttarakhand, Sikkim, these kind of states. Okay. Now, they say, if a person is registered under the special category state, for those persons, the turnover limit shall be rupees 75 lakh equivalent. The persons who are doing the business in these 8 special category state USA N3NT, if he or she is earning a turnover of up to rupees 75 lakhs in the preceding financial year, they can opt for the composition scheme, otherwise they can't. Now, the normal category states, except these 8 states, all the states are categorized except USA N3NT. All the states are categorized into the normal category states. Okay, and for those states, the turnover limit is 1.5 crore in the preceding financial year, that is double of the special category states. Now, and which are these special category states, that is USA and D? Let's understand it. These are U for Uttarakhand, U for Uttarakhand, S for Sikkim, A for Arunachal Pradesh, N3 Manipur, Mizoram, Meghalaya, and Nagaland and Tripura. Okay, so these are the 8 special category states for which turnover limit is only and only to be 75 lakhs. Next point. Are we required to learn these notification numbers are now? No storage. If there will be a important notification number which you are required to learn for the examination, I will let you. Okay. So please write the special category states memory technique. This is my personal memory technique which is going to help a lot in your examination. Please write that USA SPAT. Now, what about those various 3 special category states as total are 11, but GST department has chosen only A. So for those rest 3, that is JEH, Jammu and Kashmir, Assam and Himachal Pradesh, turnover limit is as per the normal category states rupees 1.5 crore. Okay. Next thing is self-compliance. Further, the option of a registered person to avail competition scheme for goods shall lapse with effect from the day on which his aggregate turnover during a financial year exceeds the threshold limit of 1.5 crore. As per section 10 subsection 3, you are not required to learn the subsection number. Learn the important subsection numbers and the important section number, because we are not human beings, so we do not have any kind of artificial intelligence. So we cannot memorize 100% subsection number, so just learn the important ones. Okay, now students, what is the meaning of this particular concept? As per section 10 subsection 3, suppose a person Mr. A is having a turnover, he's actually doing the business, he's registered under the Haryana. Okay, now he's having a turnover of rupees 1.2 crore in the preceding financial year. So as per the turnover, he has registered under the composition scheme for that particular year. Okay, now student, when he has registered under, suppose this turnover is for the financial year 2023-20. Okay, so in financial year 2024-25, he has already registered under the compositions. Okay, so on 1st April, he has registered under the compositions scheme. That is 1st April 2024. Now, what happens? Okay, and 1st September 2024, his turnover for the period of that financial year, that is from 1st April 2024, starting of the financial year in financial year, to 31st August 2020. Meanwhile, in this period, his turnover actually for these particular months, his turnover was 1.6 crore. 1.6 crore. That is on 21st August 2024. His turnover exceeds the limit of 1.5 crore. But now, with the preceding financial year, the turnover limit was less. That's the way. But the main objective for indulging this turnover limit, that the person is actually a small taxpayer, not a larger. Now, if in the current financial year, his turnover exceeds 1.5 crore, and in the case of special category states, UHM, VNT, 75 lakh. So from the day the turnover gets exceeded, the composition scheme shall be lapsed out for that person, and he has to register under the regular scheme, that is under the normal scheme. Normal scheme in the legal language is known as a regular scheme. Okay, so here I have already written it out here. So this was the category of turnover limit for the goods. So it was the turnover limit for in the case of goods. Now we are going to understand the turnover limit in the case of services. Now students, in case of services, there is only one turnover limit, that is rupees 50 lakh. Either the service provider is registered under the any normal state or in the special category state, if they are earning gross receipts for the service provider, the term is not the turnover. Turnover is actually the need of sale. If they are earning the total receipt, that is without deducting any kind of expenditure, gross receipts, not the profit, gross income on the gross receipt. If their gross receipts in preceding financial year is up to rupees 50 lakhs, so they can register under the composition scheme in the current financial year, otherwise not. So there's not any kind of tools. There is no category. There are not two category of states here. There's only one turnover limit that would be 50 lakhs in case of service provider. That's true. As I already told you, in case of goods and in the case of restaurant service provider, the turnover limit is 1.5 CR or in special category state 75 lakhs. But otherwise, except restaurant service, all the service providers will be covered in this category, that is rupees 50 lakh. Okay, and the same provision will be applicable here. That is if in the current financial year, not any day, the turnover limit exceeds rupees 50 lakhs for that particular financial year, the composition scheme shall be left out for that person. Okay, I hope you got my point. Great. Students, if you are liking my classes, so please like it, share it with your friend and guest. Fresh batch, that the batch will be 100% English language of the CA or CMA Intermediate Taxation is going to start for the November 2024. So, if you want to register for that batch, please let me know in the comment section also. But acknowledge that. So we have covered the case of services also. So let's come on the subtopics, that how many subtopics we have covered here. So students, we have covered the third subtopic also, that is the turnover length, or in the case of goods and in the case of services also. Now, come on the next subtopic, that is what is the meaning of turnover. Sorry. Whenever we are going to check the turnover limit, so we will check the aggregate turnover. Now, what do you mean by the aggregate turnover? Let's understand this part. Aggregate means sum total. Okay, so generally it means a sum total, at least again. Suppose there is a shopkeeper named as Mr. A. Okay, so student, this Mr. A, you all know that GST registration is on the state by basis. It means you have to register, or if you have taken a registration under GST, so it will be applicable only for that particular state survey from where you have taken the registration. It means it is state wise, not on the pan case. It means if a person wants to run a business in the Haryana, Punjab, Tamil Nadu, and in the Maharashtra, so they have to take the 4 separate registrations for 4 separate states. Now, suppose this Mr. A is running the business in the 4 states. That is, if providing the goods from the 4 states, not in and saying from, okay, that is. As case of business is in the 4 states. First Haryana, second Punjab, Maharashtra, and the 4th one should be for Tamil Nadu. Okay. So now students, obviously we have to take the registration from all these states. That is, he has taken the 4 GST registrations. Now, when we are going to check the turnover, that is, suppose the person is going to say a registration, that is the company he wants to register under the composition scheme in the Haryana. Okay. So students, we have to check the aggregate turnover, not of the turnover just for the Haryana. We have to take the aggregate turnover. That is, if the turnover in the Haryana is 3 lakhs, in Punjab, the turnover in the preceding financial year was 17 lakhs, in Maharashtra 17 lakhs, and in Tamil Nadu 10 lakhs. So, either he can register under composition scheme or not. He has to sum total, he has to take the aggregate turnover, that is 3 plus 17 plus 70 plus 10. And the total turnover should be the aggregate. So, he has to consider the aggregate turnover of the particular 4 states. Okay, student. So, aggregate means turnover for all the states. Now, so let me tell you one thing. If a person is getting registered under composition scheme from one state, so he have to register under the composition scheme in all the states. It means the person cannot do that, taking the composition scheme registration in Haryana and taking the normal state registration, regular scheme registration in Punjab. But he can't do that. Either he will register under the composition scheme for all states, or he will register under the regular scheme in the all states. Okay. So now, let's suppose he's first of all he's considering for the Haryana. This can be this 3 lakh. He's going to check not only the 3 lakh, the total turnover will be checked. That either he can register under the composition scheme or not. And it is not a kind of cramming. This is actually a basic common sense. We are saying either a person, we are actually seeking for a person, either he is a small taxpayer or not. So, we obviously have to check the total turnover, na? That of person having the low turnover of 5. Okay. Now, so aggregate turnover means the turnover of all the state. Now, either it was with any kind of taxable supplies, exempted supplies, export of goods or services or both where another country, obviously, and interstate supply. All the supplies will be covered by checking it how much turnover was in the preceding financial year. Okay. Yeah. So taxable, exempted, export, interstates, all the turnover will be considered in this point. Now, today, next point is what kind of taxes do will be what kind of supplies will be excluded from this point. So the excuses will be first of all, students, you all know the meaning of reverse charge basis now. So if a person have taken any kind of what supplies the reverse charge basis, it means that person have purchased something, but he himself just go to the government and pay GST to the government. That is a reverse charge mechanism. It means tax was paid by recipient only, not by the supplier. You know now? Yeah. So now today, we have a misconception, we have a misperception that if a person, as we are paying the tax to the government, so it should also be calculated in our supplies. The supplies which we are calculated is the outward supply. It means the supplies which we are making to another person. Inwards, but in the case of reverse charge basis, we are getting the supply that is an inward supply first. So it will be excluded from the turnover. It is not going to be included in the turnover. Second, if there are any kind of taxes under the GST law, for example, they have in the preceding financial year, if their turnover is including any kind of taxes, for example, CGST, SGST, IGST or UDGST cess or GST compensation cess, anything, it will be excluded. It means turnover shall be considered after excluding all the kind of taxes. Third one is, if there is any kind of services in the category of services in the nature of that. If a businessman or service provider extending the services to his customer or any person as a loan in the context of business only. It means, for example, this is Mr. P. Mr. P who has purchased something from Mr. D, and Mr. A said to Mr. P, okay, no problem. You can give the money to me after 15 days, but I am going to charge 10% interest on that. Students, in the business, it is very normal. Actually, it is the backbone, it is a pillar for a business. That all this happens in the business very normally. Now, takes the background of this point. So, if I consider it as just this point, not the businessman point, so I will consider for sure that it is a financial service which Mr. T is giving to Mr. P. At in this stage, we have to cover the turnover. That is, we have to cover this service in the turnover also. But if it is going to happen now, so that threshold limit of 1.5 CR or 75 lakhs and going to cross very easy. Okay, or 50 lakhs, it is going to cross very easy. So they said, if a businessman or a service provider is giving any kind of this service to any person for which they are charging any kind of interest, any kind of discount in the form of consideration, so it is not going, it will be excluded from the turnover, it is not going to be included in the turnover. Right? And in the context of that turnover, either this is taxable or exempted supply. This is exempted. But except this exempted supply, all other exempted supplies will be covered in this point. But this exempted supply, that is provided by way of extending deposits, loan or advances, insofar as the consideration is represented by way of interest or discount, it will be excluded. Now, one more important reason. While calculating the included point, that is while calculating the turnover, taxable supply, the exempted supply, these will also include value of supply which are made by a registered person from 1st April of a financial year up to the date when he becomes liable for registration under this. What does it mean? Students, we all know, as a person It is not necessary for any businessman. If whenever they are going to start business, they have to take GST registration numbers. That doesn't happen. They have to take GST registration when their liability arises. For example, as per section 22, which we will cover in the chapter number 7 registration. Okay, but let me explain. Let me tell you the basics on that chapter. In that thing, if a person, when a person crosses the turnover limit of 20 lakhs on any day, after that day, when they cross that turnover limit, they have to take the registration at the GST. Okay, not before that, they are not liable. If they want, they can take. But when they have crossed a turnover of 20 lakhs, it will become a compulsion from that. It will become a liability for them to get registered at the GST. Okay, now what happened? Right? There is a person, Mr. Chintamani. Okay, so this is Mr. Chintamani. What is the name? Chintamani. Okay, so Mr. Chintamani has started a business on 23rd September 2020. In that financial year, that is in the 2023-24, his turnover does not exceed rupees 20 lakhs. So he was not required to raise the GST registration. But when the new financial year starts, that is from the 1st April 2024, on 21st August 2024, his turnover exceeds 20 lakhs. So now he becomes liable to take the GST registration. Oh, very smart person tells him that you are now liable for becoming to take GST registration now. But do not take GST registration in the regular scheme. Instead of that, take the registration under the Composition Scheme Act. It is very beneficial for the small tax. Therefore, we get registered under the scheme. Now the important point is, by calculating the turnover limit of 1.5 CR or the 75 lakhs or the 50 lakhs in the case of service provider, during this turnover limit shall also be included by calculating at how that person have earned, how how much turnover is of that person. Okay? Yeah. So these also includes value of supply made by registered person from 1st April of a financial year up to the days when you become liable for registration under this. So I hope the meaning of aggregate turnover is clear there. Okay. Last thing is, this point, it is computed on all India basis of person having the same fan that overview that will that all the states from where he has taken the GST registration, obviously he has taken it on the basis of permanent accounts number. Okay, so all the turnover will be included in this point, not only the state one. Now, what do you mean by this no? Students, I will explain you this more with the help of an example, so let's understand it also. Now, Mr. Chintamani have taken the GST registration. Now it seems he is a composite taxpayer. He has taken the registration under the composition scheme. So now he is a registered person under the composition scheme. But what happens? As now he is registered under the composition scheme, he is required to pay GST to the government on the basis of his turnover. By calculating the turnover for which now he has to pay the GST to the government, that is half percent GST is the half percent SGST. Following points will not be included. First of all, exports. Second, interstate supplies. Interstate outward supplies. What is the reason behind that? I will be explaining you also. The main reason behind that is because when they have registered under the composition scheme, so they are not allowed make any kind of exports and any kind of interstate outward supply. The thing is a restriction of the person who is registered under the composition schemes that they cannot do any kind of exports and they cannot do any kind of interstate outward supply. They can purchase from another state for sure. They can import anything for sure. It means they can take the inward supplies from the other country or state, but storage they cannot make the supplies to the another country or state. Okay. So this is the note. This was actually the note here. The value of exports and the interstate supplies are relevant only when determining the aggregate turnover of the preceding financial year. But when we are going to check the aggregate turnover of the current financial year, in which the composition supply is opted for composition levy, so students, and they are not permitted to make any kind of interstate supply and exports, so it will not be included ever. Now the next thing. What are the rates of taxes? So with this, we have covered the next subtopic also, that is meaning of aggregate turnover. Last. The next thing is what are the rates of taxes under the composition levies? For the category of goods, the category have been divided for the goods and the rest of service provider. This category have covered it in three parts. First is all the manufacturers, but other than the manufacturer of the following notified goods. It was all the manufacturers can take the registration and the calculation scheme while they are selling the manufactured item to the other, but these notified goods manufacturer are not allowed to take the registration and the calculation scheme. And those are, first of all, it's pan masala. Second, tobacco. Third, ice cream. Fourth is aerated bottles. Now, what is aerated water? That is a soda water, like the soft drinks and all, which might use the sugar. That is the pills voice. Okay, aerated water. Next category is of the fly ash. Fly ash. After in the category of fly ash, four things will be covered: fly ash aggregate, fly ash blocks, fly ash. The first is fly ash bricks, fly ash aggregate, and the fly ash block. The three categories will be covered here. Next is storage. Two types of bricks will be covered here. That is the bricks of fossil means or the similar solution sorts, which use in the constructed any kind of building, and second is building bricks. Okay, and if there is any kind of curtain or roofing type, so manufacture of those notified goods are also not allowed to take the registration under the composition scheme. Okay, so I'm repeating: manufacturers of pan masala, tobacco, ice cream, aerated water. Four categories. Then the amended one is fly ash bricks, fly ash aggregates, fly ash soft. Then bricks of fossil means of similar siliceous source and the building bricks. Separate category, earthen or roofing type. So except the manufacturers of these notified goods that they are not allowed to take registration under composition scheme, all the manufacturers are liable to pay the GST of 0.5% CGST plus 0.5% in GST of turnover in a particular state. Now, what do you mean by turnover in a particular state? Now, if a person is paying tax to the government, so for sure, students are paying the tax to the government. They are paying the taxes of the basis of their registration, GST registration number, and it is for a particular state. So, turnover for paying the tax to the government will be considered for turnover of that particular state for which GST registration has been taken. If it's for Haryana, the person has to consider the turnover of Haryana only. And you are saying 0.5% CGST, 0.5% SGST. So can we write 1% IGST? No. Because the person who has registered under the composition scheme after getting the registration is not allowed to get is not allowed to make any kind of outward interstate outward supply. Okay. Second category is restaurant service provider. In that case, it is 2.5%, that is 2.5% as CGST or particular turnover in the state or union territory, and 2.5% in GST. Third category is any other supply except the manufacturers. It means simply I can say the trader. So for all the traders, the GST rate is same. It is 0.5% CGST and 0.5% NGST, but there is a twist. Student, for the manufacturers, let's understand it. For the manufacturers, it was 0.5% turnover in a particular state or union territory. For the rest of service provided was also 2.5% of turnover in a state or union territory. But in the case of third category, that is in the case of traders, all kind of trader, it is written at 0.5%. But not of turnover. In the turnover, all the taxable supplies, the exorbitant supplies fall will be covered here. But in the case of traders, they said 0.5% of taxable supply. It means only the taxable supplies will be covered for paying the tax to the government, not the exorbitant supply. The first category is either it is taxable, either it is exorbitant, all will be covered. Okay, students? Part of the work was going out. Same rate of SGST should also be applicable. It means that is 0.5% CGST, 0.5% SGST. I have already covered all these points while explaining even these things. You can read it out if there is any kind of query you can ask. Next. Now, what is the tax rate in the case of services? So, there's only one tax rate except the rest of service providers because they have already covered in the category above. For the service providers, it is 3% CGST plus 3% SGS. Or if it is a case of UGST, so that is a UDGS. Similar in the goods and services, if it is a case of UPGST, so instead of SGST, UPGST will be charged. Effectively, the rate is 6%, that is 3% CGST, 3% NGST. Now, that in the case of, actually it is not the aggregate turnover. It is turnover in a state or union territory. You can write here. Turnover in a state or union territory. So in the case of turnover in a state or union territory for which we are going to make the payment, it is all the taxable supplies, all the exhausted supplies made within that same state or union territory. Two things are excluded here is comparison of aggregate turnover, that is export and interstate outward supply, because that was not allowed. Excluding things are all C. Okay, that is the value of inward supply and basing done on the basis of RCF. Taxes include cesses under the GST law, values exhausted supplies in the perspective of extending deposit free law, value of supplies. Now this is very important. Two things. Suppose the person have become liable for taking the registration on 23rd August 2020. Okay. Now he has to pay tax, let's assume, on 21st December 2020. Or before that, that is the tax based on the quarterly basis. Okay, so not the 31st December. Let's take an example. Otherwise, you guys can get confused because you don't know that because you have not done the chapter of taxes payments right now. So I'm taking a simple example. Suppose 2 days. Okay. Now let's explain it. There are 4 quarters in a year. Okay. First quarter starts from April, May, June, to April to July. Second one is July, August, September. Third one is October, November, December. And the fourth one is January, February, March. So what happens in the practical like this? When April is the June quarter end, so the payment I have to make is the next month, that is in the July to the government. So students, suppose the person have registered under the GST on 23rd August 2020. So person is liable to make payment to the government on at the end of the September, that is in the month of October. So why is calculating the turnover? From 1st April 2024 to 23rd August 2024, till the date he has not taken the GST registration. So till the date he has not registered under the GST Act, the student turnover of that particular period shall be excluded because obviously the person has not registered for that particular period. Okay. Next point is, who are the persons who are not eligible for compensation scheme? Let's say it's covered the subtopics. So we have covered also the subtopic number 5, that is rates of taxes. Okay, so now there's a turn of subtopic number 6, who are not eligible to opt from compensation scheme. A student in case of goods, any person, supplier of any person who is making any supplier of goods or services which are not liable to tax and not allowed to opt for compensation scheme. Now you might be saying, Nivna, the exempted supplier, no to me. Exempted supplier means the goods or that services are covered under the GST law, but the tax rate is exempted. Okay, they are not required to pay any tax. And the goods which are not liable to tax, the things, the goods or services which are not covered under the GST law. For example, in the case of goods, alcoholic liquor for human consumption, it is not liable to tax because it is not covered under the GST law. So if a person is making any kind of supply, suppose he is making throwing supply, and one of that supply is the supply of goods either or services which are not liable to tax, so that person cannot opt for the compulsory scheme in the category of goods and in the category of services most. Second is, and they are making any kind of interstate supply. Okay, so they are not. Interstate outward supply is not allowed. Interstate inward supply is allowed. Third category is, if a person is supplying any goods or services through any electronic commerce operator who is required to collect tax at source under section 15. What does it mean? Suppose today a person has registered under the app Amazon, okay, as a seller. So what happens in reality is, suppose you have purchased a notebook from Amazon. So you have a perception in mind that Amazon is going to send that notebook to us. But what is the practical situation behind that? That different sellers are registered under the Amazon. Okay, when you make an order in the Amazon, that particular seller for which you have selected an item, they will supply you that much. Okay. Now you have made the payment of that 50 rupees notebook to the Amazon. Amazon will pay the 50 rupees minus his commission to the seller. Government said, GST law said that as per section number 52, Under Section 52 of CGST Act 2017, Amazon is required to collect tax at source from the balance payment which he is going to meet with the seller. Okay. Now, student, and they will pay that the collection of tax to the government. Okay. Now, if any seller is registered at any electronic commerce operator, and that electronic commerce operator is required to collect tax at source under Section 52 of CGST Act. So, in that case, student, the person that is the seller or the service provider are required are not eligible to register under the tax positions. Okay. Next is manufacturers of this particular item, which we have already covered. They are not eligible for tax position scheme. If any notified services, any services shall be notified, so they will not be allowed. Right now, there are no kind of services that are already notified. Now, student, if a supplier is a casual taxable person or an NRDP, a non-resident taxable person, we have covered it in our classes. You know that who is casual taxable person that who has taken the registration for a short-term period in a state, or who are non-resident taxable person that who are a foreigner, they want to sell something in our country for a particular time period. So CTP or NRDP, either they are providing any goods or services, they are not allowed for the tax position. Actually, they have to pay advance estimated tax to the government. Yeah, that's good. Any kind of services CVS provided in Section 10, subsection 1. But as a clean, even just said that, while a person is making supply, while a person is supplying any kind of goods. Okay, so they said that particular person has to supply goods only. They cannot supply any kind of services with these goods. If they are supplying, so they cannot opt for the tax position scheme. But and this that one, there is a problem, there's issue in this point, and that issue was actually suppose a person is selling TV to other person. Okay, suppose there is a person Jane Dara. Jane Dara is selling TV or is selling any electronic items to the another customers. Now the customers are wanting warrant or after sales services from the Jikhala. He said, okay, I will give. But when he said, okay, and when the GST department comes, let's tell me Jikhala. It means you are providing goods as well as services to the customer. And as you are providing customer services to the customer, you are not allowed to offer tax positions. Postally, for the removal of this thing, another point, another provision comes in GST section number 10, marginal supply of service. And marginal supply said that, okay, with the supply of goods, with the supply of risk or services, you can also supply other services, but at a minimal point. And that minimum point, that is that threshold limit is 10% of turnover in preceding financial year or rupees 5 lakhs, whichever is higher. Okay, so the next, suppose the person is having a turnover of rupees 1 crore in the preceding financial year. Okay, so they said that in current financial year, now you can, with the supply of goods or with the supply of restaurant services, you can supply other services also, but max 10% of 1 CR or rupees 5 lakh, whichever is high. Okay, but that is a point marginal supply of services which we are going through, which we are going to now understand also. Okay. So the next topic is marginal supply of service. So the specified value is value not exceeding 10% of turnover of state or immediate territory in the preceding financial year or rupees 5 lakh, whichever is higher. But another important point which we are going to be discussing, that is the marginal supply of services as today. This will be checked for particular state turnover. That is, suppose we are taking the registration from the Haryana, so that 10% of turnover of Haryana in the preceding financial year or rupees 5 lakh, whichever is higher, shall be the maximum limit for which a person can provide the services if the services of with the supplier first. Now I am going to tell you a trick for the MCQ question, that is for the multiple choice question. Okay, so let's, if question of multiple question of marginal supply of services come in the MCQ part, which is very important for the technical question, that is the MCQ part actually. So today, in examination, we do not have so much time that we can calculate for the MCQ part also. So there is a trick. The provision is 10% of turnover in a state in the preceding financial year or rupees 5 lakh, whichever is higher now. So if the turnover of that state in the preceding financial year is up to rupees 50 lakhs, it's up to rupees 50 lakhs. So the answer shall always be the second one, that is rupees 5 lakh. How? If the turnover is up to rupees 50 lakhs, suppose 45 to 49 lakhs, so 10% of 49.9 lakhs. Or rupees 5 lakh, whichever is higher, so answer shall always be 5 lakhs. Okay. But if the turnover is lower than rupees 50 lakhs, the answer shall always be 10% of turnover. For example, if the turnover is 51 lakhs of 5.1 lakh, 10% of 51 lakhs, 5.1 lakh, or 5 lakh, whichever is higher, or 5.1 lakh shall be the answer. Okay. I have already written this memory technique in the interesting text section also. Okay. As students, in this case also, by calculating the turnover, we have to explain the turnover in the category of interest income from supply of services to any other person, or that financial services which are which are actually some supply. Okay. That is the same supply that and we have covered in the category of irrigation turnover or turnover of the speed. Now, the next subtopic, we have already covered a subtopic of next subtopic, that in eligibility for scheme. Also, we have covered management supply of services. We have covered, now we are going to cover the last but not the least topic of HUMAT, condition and restrictions for composition year. Okay, now let's start. First comment, condition and restrictions for composition living. First of all, if a person has registered in composition scheme, we all have a confusion in our mind, like, and they are eligible to pay the taxes under the reverse charge mechanism, that is Section 9 subsection 3 or Section 9 subsection 4, so the answer is yes. If a person has registered under the composition scheme, in the case of finger supplier that is purchasing anything, they are told or taking any services, they are totally allowed to pay the registration under all job. To pay the tax under the RCM, that is under Section 9 subsection 3 or 9 subsection. Okay. Second restriction, first one is clarification. Second restriction is that student, a person who has registered under composition scheme, they can neither be a casual taxable person or a NRTP, that is non-resident taxable person. First one is a person who has registered under the composition scheme, they are required to compulsorily write down on the top of the bill of supply issued by them, that is the composition taxable person, not eligible for to collect tax on supply. Now you might mean that mandate. It means on the invoice they are required to mention the word that is composition taxable person not eligible to collect tax on supply bill. The reason is otherwise, however, how a customer will get money that we are not required to pay tax to that person. Okay. So whenever you are getting any kind of invoice or a bill of supply, on top of which it is written composition taxable person, never ever pay them GST because they are not required to collect taxes from the customer. And you can simply write invoice now. Why you have written the words bill of supply? Let's understand the meaning of bill of supply. So this invoice means on which a customer is required to pay the taxes to the shopkeeper. But as the composition taxable person is not required, it is not allowed to collect taxes, so we cannot use the word invoice. The exact word is bill of supply. Okay, that is the supply bill of supply. Second is, students, they are required to write on every notice or signboard which is displayed at a prominent place or principal place of business or any kind of heavy or that is additional place of business, they have to write composition taxable person on their notice or signboard. Okay, next is so with this particular point, we have covered the section number 10 of GST Act 2017. I hope you all understand this point now. Students, all subtopics have been covered in the class. Still now, if you're getting any query on this particular topic, you can pause on right in the comment section. If you like my classes, so please subscribe my channel and share it with your friends. And then please write down in the comment section that this topic you are required to understand in the next session. Thank you, students. Have a nice day. Meet you in the next session.